As part of what we do for our customers, we read mainstream stock media every day, and it's rare when I don't see an article spreading fear, uncertainty, and doubt over cryptocurrencies. Most of the time, these are written individuals that, number one, do not understand it, number two, are threatened by it, or number three, feel that they are being left behind and want to cling to what they know. Hey, I remember all of the horrible rumors that spread when the internet was introduced, which displaced expensive private networks. Warnings like, hey, there will be no security. Everyone will be able to read your data. You will be hacked. Remember how the Y2K bug in the year 2000 was going to cause global chaos? Look, most people are terrified of what they don't understand. So whether it's the Ebola crisis or the fiscal cliff or whatever crisis du jour, rest assured that fearmongers live amongst us and will do their best to scare the pants off of you to get ratings or to create clickbait to get you to view that article. Now, you are right to question the validity of an investment vehicle. You should never feel pressured or belittled into investing into something that you don't fully understand. So let's start off by addressing the scam claims. Webster defines a scam as a dishonest scheme or a fraud. Is Bitcoin itself part of a scam? A dishonest scheme or a fraud? Let's separate the fact from fiction. First off, I've heard people refer to cryptocurrencies and Bitcoin in particular as a Ponzi scheme. Most of those people do not understand what a Ponzi scheme is to begin with and associate any activity that they don't understand with Charles Ponzi's original method. Our friend Webster says that a Ponzi scheme is a fraudulent investment operation where the operator generates returns for older investors through revenue paid for by new investors, rather than from legitimate business activities or profit of financial trading. Operators of Ponzi schemes grab the attention of new investors by offering short-term returns that are either abnormally high or unusually consistent. Most people are aware of the name Bernie Madoff, who ran an elaborate Ponzi scheme and only got caught when the money ran out. So, can Bitcoin be a Ponzi scheme? For every buyer of Bitcoin, there is a seller. No unnamed organization or middleman is acting to siphon off the funds to themselves or earlier investors. So for people that are calling Bitcoin a scam, they simply don't understand how crypto is traded. This is also why you should only buy Bitcoin, or any other coin for that matter, from one of the exchanges that we list in our programs, newsletters, and chat rooms. You are trading one asset for another, and there is no intermediary other than the exchange. Other type of label that I hear attached to Bitcoin or other cryptocurrencies is that it's a pyramid scheme. Again, according to Webster, a pyramid scheme is a form of investment in which each paying participant recruits two further participants, with returns being given to early participants using money contributed by later ones. Now, you might recognize this model and think, hey, that's like Amway or the Mary Kay Cosmetics lady that drives the pink Cadillac. Are those illegal? Well, those are multi-level marketing structures which differ from a pyramid scheme in that they have a real product to sell. Not all multi-level marketing plans are legal, though. If the revenue that's generated is based on your sales to the general public, it may be a legal multi-level marketing plan. If the revenue that you generate is based on the number of people that you recruit and the sales that you make to your recruits, it's probably illegal and could be a pyramid scheme. Now, using the precise definition of a pyramid scheme, how can buying Bitcoin or cryptocurrencies be a pyramid scheme? You are not buying Bitcoin from some agent further up the pyramid than you. You're buying it directly from an exchange. Does your buying Bitcoin create more money to those that were in early? Well, perhaps by raising the price due to the demand increasing and supply dwindling. But if the only way that you could buy Bitcoin was to go through some agent who reported to somebody further up the chain, then this would truly be a concern. But buying Bitcoin or any other cryptocurrency from an exchange is completely different from a pyramid scheme and does not earn that association. Now, does this mean that scams do not happen? No. There are a couple of different ways that scams can affect individual investors. First off, do not participate in third parties offering to invest or create guaranteed returns for you. The Ready Set Crypto service will be constantly surveying the crypto terrain looking for shady deals or real scams that you should avoid. Secondly, scams or theft can occur to your assets personally. An increased emphasis on personal data protection and security needs to be in place for the individual investor. There have been instances where assets and coins have been stolen from individuals' accounts, either through insufficient security on the user's behalf or social engineering techniques to convince the user to give up their private keys by accident. Later on in this video series, we will cover how to protect yourself. Now, the second point that I brought up was whether cryptocurrencies were in a bubble. Let's go to the Investopedia definition of a bubble. A bubble is created by a surge in asset prices unwarranted by the fundamentals of the asset and driven by exuberant market behavior. When no more investors are willing to buy at the elevated price, a massive sell-off occurs, causing the bubble to deflate. As I record this in December 2017, certain crypto assets certainly could be considered to be in a bubble. Whether or not they are unwarranted, though, we cannot know at this time. And presuming that they have hit their high means that our confirmation bias is shining through. Let the price tell you when it's hit its high watermark instead of trying to predict the future. What I generally find is that it's helpful to study the past to know how to avoid making the same mistakes in the future. Let's look at two very distinct past bubbles. Most people know about the tech bubble that spanned 1995 to the peak in 2000. This is where investors began to sense the potential of the internet, and it culminated with every little mom and pop tech company doing an initial public stock offering. Nobody was generating revenues. It was all based on expectations. This was an unsustainable environment. Everybody knew it, but it just kept on going. To give this bubble some context, most also remember the key tagline that Fed Chairman Alan Greenspan gave this bubble in this speech. But how do we know when irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions as they have in Japan over the past decade? Now, here's the point that I want to make. Greenspan's speech was given December 1996, right there. The bubble continued for more than 3.5 years past that point. The lesson to be learned from this is that bubbles finally pop when everyone is on board, and not when people think that they should pop. Now let's talk about the silver bubble that happened from 2010 to 2011. This bubble started the day that Ben Bernanke spoke about adding quantitative easing to this market in August of 2010. It was right there in Jackson Hole, Wyoming, as he gave a speech where he said that they were going to be adding quantitative easing to the market. Institutional investors quickly determined that this might increase inflation at an unreasonable amount, and precious metals are traditionally used as an inflation hedge. Once again, I'd like to refer you to the chart of silver during this period. Look at this move that occurred. Notice how the strongest gains for this asset occurred right near the top of this move, right near the end. This is a classic runaway market where short interest gets punished and longs panic and buy, afraid of missing out on the move. The perfect storm always occurs right at the end. Also notice how long it took to top out. This was the initial move, and that was only half the way through this. Most referring to this as a bubble well before the actual top of the market in silver in 2011. One other thing to note from these charts is how we identify the end of the bubble. Volatility always increases at the very end, and the price gets massively unstable. Notice this initial move down. Notice how it became much more unstable, much different character than how the price was very quiet and moving to the upside. In every bubble that I've studied, bubbles always crash in the same manner. Most of the gains come at the very end, and then the real volatility comes in as a warning signal. Now let's examine Bitcoin. Is this asset in a bubble? Yes, certainly the price rise has been parabolic. But is the price rise unwarranted? This is more difficult to answer. I think that we always tend to call a price rise unwarranted when, number one, we're not in it, and number two, people don't understand it. In much the same way that most investors did not understand tech stock valuations in the late 90s, we have a similar story with Bitcoin. My sense is that we will continue to see the price rise with Bitcoin in the near future because it's the standard bearer or the 800-pound gorilla in the space. We have also not seen the hallmarks of a top with volatility and instability increasing. It's been fairly linear to this point. Eventually, what will happen is that when crypto becomes more mainstream and the limitations of Bitcoin for anything other than a store of value are exposed, then many holders of Bitcoin might divest themselves into other assets. Okay, we went over a lot of ground in this video. We talked about potential scams that could affect cryptocurrency traders. We talked about why applying the terms Ponzi scheme and pyramid scheme do not apply to Bitcoin and other cryptos. We talked about other areas where investors need to protect themselves, and we wrapped up this section by discussing what bubbles were. These are, of course, topics that we discuss real time in our daily newsletter and video chat service, so we can always provide our customers the latest in protection with their trading.